Hey, everybody. Welcome back to the Real Prospectus Podcast. Thank you for joining us again. I'm one of your co-hosts here, Vladimir Bosanac. I'm the co-founder and publisher of the registry, and I'm joined today by my co-host, David. David, say hello.
Hi, David Saxe, Calvera Partners. We're a multifamily owner-operator in California and Texas in North Carolina.
Wonderful. David, good to see you again. Nice having you on the show. Where are you today?
I am in lovely Sausalito, California, where I moved about a year and a half ago. And I love it up in Marin, but do miss San Francisco and get there all the time.
You escaped the frenzy of the AI world, I suppose, right?
I did, but as we'll probably get into, I imagine the frenzy will make its way up here if it already has not.
Very likely, very likely. Well, awesome. As part of our conversation here, we have a few interesting topics that we've kind of selected to talk about. One of them is definitely going to be discussing some of the impact that AI has had not on just on this region, but sort of nationally as a whole. We'll touch a little bit about kind of where the inflation is and some of the figures that we're seeing. We'll talk a little bit about the multifamily market, which is sort of your area of expertise, David, right? And then finally, we'll kind of close with sort of our perspective of what's happening down in Los Angeles. Some interesting stuff with mayoral race, obviously, and the movie industry is being impacted by what's happening in innovation and AI as well. So we'll touch upon that. But I'll let you kick us off here with sort of your first discussion point. So where do we want to go?
Yeah, let's start with a topic that everyone in the real estate industry, particularly on the transaction side, I don't care what sector you're in, where you play. I mean, obviously I play in multifamily. But let's kick this off by talking about all the uncertainty out there. I don't care if you're a small company, a large company. What we're seeing out there is, and we can go through all the different things that are causing the uncertainty. It's just leading to what I'd call market stagnation. Lack of deals getting done, people sitting on the sidelines and taking a wait and see mode. But it's a little bit frustrating because we're in the business of doing real estate deals. And for good reason, people are being cautious. And we can dive into all the things that are causing the uncertainty, ranging from inflation. We had a report today. You've got the war in Iran that is obviously impacting inflation. You've got interest rates that are hard to make sense of. Just when you think they may go down, they may go back up, or they may stay the same. But yeah, let's dive into that.
Yeah, and I am curious because it does seem to me like over the last maybe quarter, we have written more stories about deals happening, transactions happening, not always at the top of the market, obviously, right? Most of them are kind of workout deals. So I am curious, the stuff that you're seeing in terms of kind of things slowing down. Is that, are you seeing that kind of across the country? Are you seeing it in certain pockets? Where is this happening?
I talk to a lot of folks around the country, and I'm an active user of LinkedIn, which is where it seems like all the action is these days. So I even read posts by people that are operating around the country, and particularly even in the multifamily sector, which is typically the most active, attractive sector. I am seeing personally and hearing from others that it's hard to get deals done right now. There seems to be still a pretty large bid-ask spread where we would like to pay a 6 cap for a multifamily property. And some of the sellers and many of them are still under the impression or having a hard time accepting that the days of 4 caps and things like that are gone. That's just one of many things that is impacting the lack of deals. There is debt available on that side. The lenders are active, But if people can't get comfortable buying anything and figuring out what the valuations are because of regulatory issues, supply uncertainty, interest rates, a war, climate events,
Right.
I could go on
Right.
and on and on. It's hard to get comfortable buying anything and figuring out what your price is.
How about jobs? Jobs typically drives most of the stuff in this industry. Are you in those conversations, sensing that people are worried about employment?
Man, it really depends on who you talk to. We're obviously based out here in the Bay Area, and I feel like anywhere I go out and about, could be a dinner party or anything else, not just in the real estate world, jobs. And I don't want to sound like a broken record or do a topic that everyone might be tired of, but yes, people are very focused on the impact of AI on jobs. I don't know, 6 months ago, there were so many Twitter pieces and articles that were so doom and gloom. Like, we're going to be it's going to be apocalyptic and everyone's going to lose their job. I agree with some of the things I'm reading now, which is we've always had technological disruptions. We've gotten through them. There probably will be some short-term pain. Not
Right.
everybody's going to lose their job. So it remains to be seen the impact here across the country with this jobs
Yeah,
topic.
and my question was less so about AI specifically, but just in terms of like how people are feeling and if they're noticing anything. Some of the numbers that we have seen on the reporting side, even though I believe the last whatever report came out, I think the numbers were positive. But then the one thing that was not sort of reported widely, but we did sort of dig into some of the figures more deeply, and there was like something along the lines of like 400,000 people have like left the job market month over month, which seemed like a big number. It seemed like a very big amount of people, and that's why I'm sort of curious. If anecdotally at least, some of these people across the country are seeing things where they're saying like, yeah, unemployment seems to be not doing great or it's flat or, whatever, irrespective of what the cause may be.
Yeah, I mean, that kind of ties into the general uncertainty and I would say thought process and psychology of the people out there. There's definitely concern. Anecdotally, I do hear about people extremely frustrated, having a hard time finding jobs. These are college graduates. For the first time, I was talking to somebody on the equity raise side who, for the first time, started to mention to him, well, we're starting to think more and more as we raise money and look at where we're going to invest on jobs and the concern around there. Jobs are obviously, as you asked, highly correlated to the demand for apartments, for office space, for anything. So if that starts to taper off, that's absolutely not a good thing.
Yeah, for sure, for sure. And we're definitely tracking it. I mean, I've seen figures, the cohort, sort of that kind of young college grad cohort, let's say, I don't know, 20 to, I don't know, 35 or whatever. That cohort, the unemployment in that group, I've seen numbers is as high as double regular unemployment. So let's say 8%. And I've seen one figure, this one figure that I saw was specific to Southern California, was as high as 14 for that group alone, right? So it is, it is interesting. It is something that's worthwhile following. And I think, back to your inflation sort of point, I do think that, interest rates are obviously tied to inflation, right? So inflation is up, interest rates are going to probably stay up as well. Jobs are going to drive that. I think it's going to be one of the drivers. Clearly, the war is one of the drivers. Even though we may have enough sort of oil in this country, I heard one economist say, our oil is free in a sense that it's going to go where the highest dollar can be made, and if that's in Europe, it's going to end up in Europe, right? Which then inadvertently affects our supply as well. So that is interesting that you're beginning to see that, and I wonder if we're probably 3 to 6 months behind probably what you're seeing, in a sense that we report on deals. So if you're starting to see things kind of stagnate on the deal volume or deal execution, that means we're probably going to start writing about it, sometime this summer.
Yeah, and back to your point,
would my guess.
a lot of the deals that are getting done, particularly in multifamily or across the board, are folks that have just kind of run out of time. Yeah. So, the lend and extend thing was real, but I'm starting to see some more office transactions happen. On the multifamily side, things are happening if people really just can't wait any longer and their leverage is too detrimental and they can't cover the debt service anymore. So, everyone, when the post-COVID going out of that was like, there's going to be this huge wave of distress and everyone got all excited. Well, it's true, but it's not like after the GFC where all the lenders just foreclosed. They don't want to be in the business of operating real estate. So I think that's why you're seeing a little bit more of a trickle other than office. But you've starting to see more distress in the Sun Belt on the multifamily side due to the excess new supply, which is causing people to have to do deals. But generally, I mentioned the uncertainty on the demand side. But if people aren't needing to sell because they don't want to sell into a bad, quote unquote, bad market, that also hurts the amount of deals that happen.
Sure.
So it's on both sides.
Yeah. No, 100%. It's certainly something that we're going to keep watching. I'm very curious that you're beginning to see this, and I do wonder, what that means for the deals kind of flowing on the West Coast, at least where we cover the industry. But we'll come back to the multifamily story here in a few minutes. I did want to bring up kind of one conversation which we touched on just briefly. AI. I guess the positive aspect of AI is that it's minting millionaires by the minute. You and I just talked about this briefly, but there's a very interesting kind of point that some numbers here that I'll read off. So OpenAI in October 25 had a tender offer, and it let 600 plus of its sort of current and former employees sell about 6.6 billion in stock. That was about $11 million per person on average. And roughly 75% of these people sold a maximum of $30 million each. Huge numbers. This is one of those lifetime, once in a generation kind of things, right, David? What do you think?
Yeah. One of the articles I think we were looking at called it this generation's lotto ticket. That being said, I do not want to discount that the folks that work at these companies are highly intelligent. So there's a reason they're working there. But it is absolutely insane kind of what is happening now. A couple anecdotes on this, because this is a real estate podcast that I'm hearing and reading just in the last week, are the demand for mansions in San Francisco are off the charts. I mean, there was a $40 million sale, $56 million sale. I have a good friend who I won't name, prominent broker in San Francisco, that wrote me a note yesterday in all caps saying he's never seen anything like this. It's quote unquote, insane.
I have a broker friend, David, who said, and he said this deadpan without a joke, we're running out of mansions in San Francisco, which is just like, it's sort of an unbelievable. I was kind of, chuckling when he said that, but he wasn't. And it's very, very interesting, very indicative of where this is heading. This is really, really kind of an insane time, right?
I think we said this at the beginning of the podcast when I talked about how I live in Marin. My personal feeling is as we run out of mansions in San Francisco, people will come to beautiful Marin. There's plenty of mansions out here. I do not see people moving into Oakland anytime soon. That's a different topic, but that often happens when things in San Francisco get nuts. A couple other anecdotes. There was an article, coming back to this impact on real estate. We talked about the mansions and the homes. Rents in San Francisco are doing things that I have never seen, we all thought this would happen. There was an article over the weekend, and this is a recurring theme. Some of the rents that are being achieved particularly in Mission Bay, where fortunately, until I moved to Sausalito, I own a condo that I'm coincidentally now leasing to an OpenAI and Meta couple, and he can walk to work. I leased that for a very large per square foot, I don't know, a year and a half ago. What I read in this article is that since that time, I could probably get 25, 30% more now. Wow. And I just see that increasing. There's a lack of, even in Mission Bay, supply. These folks have what seems to be endless money. So whatever's convenient to them is going to happen. Last point I'll make, and I'd love to hear your thoughts, is the lines out the door for rent-controlled apartments in San Francisco again is real. I remember back in the days where people were doing PowerPoint presentations to try and get an apartment. I feel like we're back there now. And that's also going to mean that people never leave their rent-controlled apartments who are in there, which is going to reduce the supply further.
Yes. Yeah. 100%. And David, you've probably seen this in, some of the figures, but I believe in Q1, San Francisco was the highest rent growth city in the country, if I'm not mistaken.
Absolutely.
Anywhere between 9 and 12% in some cases, right? These are averages, obviously, right? So I believe in Q2 we're going to see that scale even further. Equity Residential, Essex Property Trust. I mean, these are big multifamily. Investment holding firms are all reporting that San Francisco is their strongest market in the country. Clearly tied to AI. We've seen some, Redfin reports on, average home prices in this region, continue to grow, right? And just anecdotally, right? I mean, you can kind of see that, this region seems to be kind of, rebounding. Again, probably not something we see around the country, right? And maybe we can jump into that. Now, David, you said you have investments in Texas and North Carolina, but compared to Northern California, I don't imagine you're seeing that kind of traction and action in those other markets, correct?
Yeah. Switching over to that, although as you said, it's related. It really depends, particularly on the multifamily side. It really depends where the properties are. So we do own some things in Texas and North Carolina. We were fortunate enough to get in and out of, speaking of supply, in and out of Austin at the right time, just starting there. I don't mean to make a joke out of this, but they proved that you can solve a housing crisis and rents skyrocketing by actually building. And we saw that rents have dropped unbelievable amounts in Austin. I think it was something like 20 to 30%, right. Even on the home side. That was an extreme of developers all moving into Austin. Similarly, into other areas of Texas, even things like Dallas that saw a record amount of demand. So you've got a record amount of demand, which is great if you're an investor, but you've also got a record amount of supply. And as you kind of started to allude to, we were talking about this a little bit. When we invested in these areas, and many people invested in these areas, fortunately we buy conservatively, but all the prominent real estate economists were saying survive till 25. Then it was 26, and now I'm starting to hear 27, because the point being is that everyone thought that the supply would start to burn off. That kind of didn't happen. I'm finally starting to see some data alluding to that happening. But in the meantime, what has that meant, to your point? Rents have been stagnant, if not down, in some of these Sunbelt markets. There have been concessions. All the owners there are waiting for that to kind of burn off, which is correlated to supply, before there might be some upward pressure again. And there's plenty of room to build there. Texas developers love to build.
Yeah. Yeah, no, and we've seen similar story in Seattle also over the last decade. Lots of product, delivered. It's kept the rents relatively flat. Anecdotally, I have heard some investments, some investors, investment, trusts did not want to go into Seattle because they kind of felt that they couldn't really grow the rent there much. And then we're seeing the opposite now happen, where I believe they're putting the brakes on a lot of the development there, and all the brokers locally are expecting the rents, for obvious reasons, to go up. So yeah, I do hope that in some other parts of the West Coast that can happen. It does. You're absolutely right. Certain parts of the market seem to be doing really, really well. I don't think the sort of rent growth story that we're seeing in San Francisco, for instance, is evident in Oakland. Perhaps, maybe I'm wrong, but I don't think so. Right. So it does depend where you want to live. And I would say probably, certainly in Southern California, some parts are doing better. It seems like, Orange County and San Diego are doing better than downtown LA, for instance, right? LA County is a sort of different story, but, those are some kind of things. Let me ask you this, from some of the conversations that you're seeing on the development side, are people feeling optimistic? Are people feeling that, the kind of COVID hangover from, lack of supplies and, all of this other stuff around tariffs, is that still a factor in the industry?
Yeah. There've been a lot of interesting commentary on this as of late. I believe that everybody, including myself, I'm not a developer, but obviously I'm knowledgeable and know developers. To your question, everybody was freaked out about the tariffs. And that it was going to crush development and increase costs. I think you've seen that somewhat on the materials side, for sure. But I think the more interesting piece about the tariffs is the uncertainty it causes. Do we have tariffs? Do we not have tariffs? Do we have tariffs? Right. How large are the tariffs? Who are they on? That'll cause development to stall. And I feel like that, going back to our first topic, is more the impact of it. What I can say is, whether it's tariffs or other things, as I mentioned, the data is starting to show that things are burning off. One other point I'll make, back to something that you started to talk about in terms of other areas that are not the San Francisco. Yeah, we, I guess, unfortunately, own a building in Oakland. Traditionally, when San Francisco booms, Oakland booms. We haven't seen that yet due to all sorts of governmental oversight problems in Oakland and other what I'll call structural problems. I will say at some point here, you've got to see some upward pressure on Oakland rents as that AI wealth and all works down the system, even at people that are not making that kind of money. And then the last thing I'll say that we didn't cover in terms of areas of the country, the Midwest markets have also been very, very strong. Usually that's been kind of a steady Eddie market, but right. What you see is folks finding affordability there. And so that has driven up rents there, and they haven't seen quite a bit of supply.
100%. Yeah, we have seen some of that happen through some of the reporting that people are definitely the affordability thing is real, and it's pushing folks into markets like Chicago, probably Milwaukee, and some of the kind of midwestern sort of areas where you can get a job and keep a job, and there's enough of a large economy that you feel somewhat secure. That is very, very true. And the other point that I wanted to ask you also is, labor. Have you heard, any challenges, obviously, with immigration? I mean, has labor been, an issue on the development side with the folks that you're talking to?
Yeah, it's definitely a concern. It's kind of a case by case basis. I mean, yes, the crackdowns on immigration are probably not going to help the supply of labor in that department. Inflation does put upward pressure on wages and things like that. To me, it's kind of a combination, though, of all of these things are leading to what we started to, which is the just general uncertainty out there, and whether it's labor, new supplies impact on rents, or any of the things we talked about earlier, it makes it really hard to navigate making any sort of decisions, moving forward with the development, and knowing what kind of world you're going to develop into.
Yeah. Let me ask you about the capital stack. Are you seeing, there was a lot of money kind of going into data centers, right? Are you seeing, sort of big institutional folks, reallocating funds from, let's say, multifamily or things where they were, traditionally, more engaged in, to kind of some of these other areas, even, energy, right? Or have you noticed any of these, private debt funds that have apparently raised, trillions of dollars, right? Has that begun to trickle into some of the multifamily deals?
Yeah, I mean the ability to find leverage or debt, if that's what you're referring to,
Yep.
is absolutely there. That market is open for sure. Now the underwriting standards obviously are going to be a little bit different than they were, and what you can get and what proceeds you can get when your interest rates are way higher. That's obviously impacted. But there's always going to be demand from lenders for maybe not in Oakland. I'm kind of kidding. For multifamily, you also touch on data centers. The data center boom is in the news all the time. I think Blackstone just raised a fund for data centers. That is the hottest real estate sector at the moment. It's very capital intensive. So, I'm not going to go out and buy a data center, but Blackstone can build these. A little bit of a tangent, but somewhat related, is even if you can build these data centers, the question is to your point, is there energy available to actually drive them? I just saw an article in the might have been this morning, in the Wall Street Journal, about how NVIDIA is now working with homeowners to leverage the power from the homes, the excess power. So similar to how zoning impacts development, is power going to be the constraining thing here on the expansion of data centers, or will we continue to have to go into space as I'm data centers in space?
Yeah. Yeah, and what's interesting about this is I listened to this podcast called China Decode, which is focuses on some of the things that they're doing in China, obviously, right? That we can learn from. One of the kind of lessons learned from all that is that they've built such a huge amount of capacity in terms of both solar and wind, and also nuclear and coal and everything, right? That like power is just not even an issue over there, which is really interesting. It does seem like we are kind of behind the eight ball significantly in this country in terms of building some of that power. And I think these issues around why people are hating or don't want data centers in their counties or whatever stems from that as well. Unfortunately, there are some parts of the country are also not very friendly to solar. Although I'm beginning to see stories that, in Texas, of all places, right? I mean, renewables are really growing fast and growing quickly because folks there are realizing they've got a lot of sun and a lot of wind, and they can actually use it in ways that will help them, right? So it is interesting. I think energy will be something that we're going to be dealing with for the rest of our lives. I'm not sure it's going to be solved. It's just going to be something that we'll kind of, hopefully manage for the better, right?
Yeah, I agree with you. Many people don't want data centers in their backyard, so that's sometimes a limiting factor. Back to your point on China, we're always competing against China, so and they're going to do what they need to do to make these data centers happen for sure. One other quick point on the data centers is there's a lot of speculation are these AI companies, chip companies overdoing it with the data centers, meaning they're putting down more pressure on their own cash flow because they're investing in this, with the hope and a plan that there is going to be the demand for that. We could argue about whether or not it's going to be there to the extent of what they think it's going to be. And if not, man, what's going to happen to these AI companies? I don't think I'm a big believer in the AI bubble, but if they overbuild data centers, what does that mean?
Yeah, I don't know. I think the demand is there.
I agree with you. I agree with you.
I think it's going to be interesting. I think some of these smaller municipalities are going to be impacted maybe more than some of the bigger ones, simply because you'll have less of a hurdle to overcome to build something or get something approved, right? I can imagine sort of a small town in somewhere, I don't know, in the Midwest, all of a sudden getting hundreds of millions of dollars of investment that they would never see otherwise. I mean, how do you turn that away? I think they're going to find places where they're going to put these boxes, and that's where they're going to be. I don't know.
I agree. I completely agree.
Yeah. So, well, good. Well, also, as our kind of last sort of discussion point, David, I think we wanted to touch base a little bit about what's happening down in LA. Kind of an interesting sort of summer coming up. Obviously, not just because the World Cup games, or some of them are going to be played there as well, right? But there'll be some interesting things there going on with that. Then the Olympics are coming in about a year later, obviously. So, but before that, we're going to elect a new mayor in Los Angeles.
Yes, we are.
Tell me, what are your thoughts about that, and kind of some of the things that you're seeing that are interesting for the industry, with respects to that.
I find LA to be absolutely fascinating right now. Real quick thing on the Olympics: I tried to enter the lottery for tickets. I was not successful, but I hope to get there, given that it's somewhat in the backyard here. As I just started with, I think everything going on in LA is so interesting. The mayoral race, you've got literally a reality star gaining. I don't think he's going to win, but gaining traction, having viral campaign videos on social media, going directly at Karen Bass. I think you've got a Democratic socialist candidate in there. It is a fight to see what's gonna happen there. I was personally hoping somebody like Rick Caruso was going to run, because I think he could have been, and not just because I'm biased towards real estate folks, I think he could have been LA's Daniel Lurie, more of a moderate and can turn the city around. While I'm on that point, I think a lot of what LA is facing right now is a governance problem. So getting a, for lack of a better word, more rational, moderate mayor, I think would be helpful to keep that city moving in the right direction. You've also got a regulation issue where they can't seem to get out of their own way. And look, we face that here in the Bay Area with entitlement complexities, transfer taxes, insurance costs. It makes things difficult to get anything done there. And then the last thing, and I'm curious to get your viewpoint, is there's all these debates about the entertainment industry and the future of the entertainment industry, which is obviously a big driver, the main driver in LA. Our studio is going to leave. Are we going to lose all of our actors because everyone's going to be AI now? I don't believe that. Our studio is going to relocate. Is the cost of living too high? So it makes sense to move elsewhere. So that, in summary, is why I just find this market to be so interesting. And man, it's LA. It's Hollywood.
It's so big, and it's so freaking geography is massive, right? And it's super diverse. I mean, it's a really interesting market. From a point of view in terms of where the entertainment industry is, and I don't work in entertainment, I work in media, but I'm sort of adjacent to it. I can sort of say, right? It does seem like it's a time of change, and a lot of things will be new. Let's say 5, 10 years from now, you will be doing things differently, most likely, than you are doing them now. From kind of a leasing point of view, it does seem that some of the studio landlords are doing better than others. One example is, Hudson Pacific just released their first quarter of 26 numbers. Their studios seem to be doing well, really, really good. But I also know I've also seen some numbers, different reports from, I guess, Film LA is one kind of industry sort of publication that the utilization of sound stages has gone down significantly. What that probably tells me, and we can certainly ascertain this from what's happening with Paramount and Warner Brothers, what's happening with Apple and Prime and all this other stuff and Netflix, right? Likely some kind of consolidation, and likely the digital giants will probably win. And likely they're going to change the way these things are done and how they're done and where they're done. And so I think, here in the Bay Area, people don't maybe, remember this, but, we have Pixar here, they're based in the Bay Area, right? Even though they're owned by, Disney now, they're still here. They didn't move that talent to, Southern California, to Burbank, right? So I do feel like the industry will still be present in Southern California, most likely looking very, very different, and most likely engaged with technology and AI in a way that we probably don't see today.
Mm-hmm. Yeah, I agree. And I would say just generally about LA, this is my personal opinion. As we work through these challenges, that's the short-term issue. But at the end of the day, who doesn't want to live in that kind of weather? It's a gateway. It's a global city. There is good technology there. Whether it's entertainment, which I still think it will be, or something else, aerospace, defense, there's going to be demand to live in a climate like LA. Like they're gonna figure it out. I will. One last other point I'll make is, in terms of, it's kind of surprising was there's been an increase in new supply of multifamily there. Now, given your point on the size of LA, it's often outside of LA proper, because of who wants to deal with kind of the stuff going on in LA proper. But again, all these factors, such an interesting city to watch, and somewhat tied into, as we were watching, what was going to happen with San Francisco and how it's emerging. I'll finish by saying that I think good leadership is very important at the end of the day.
100%. And look, I mean, LA just a couple of years ago, I think, what are we talking about? In the last year, we were talking about the Trump administration, bringing in ICE there, riots, right? You had kind of parts of downtown LA walled off. My son plays sports, and we were at the convention center, and we had a curfew. I mean, dealing with that kind of stuff is sort of unthinkable, right? You had the two graffiti towers right next to the crypto arena there that apparently are now almost sold, right? There is interest from at least a couple of buyers to move those buildings and do something with them. LA will be one of those very dynamic markets that will always be interesting and engaging, and I think the weather, unless climate change destroys it,
that's the only driver.
Exactly. It'll still be one of the best in the country. So 100%. So anyway, as we close our conversation here, we have our kind of final segment here called Microscope Telescope, where we kind of look at things really, really in sort of, detail, or kind of take the lens, far out, and take a sort of perspective on something, specific. I'll kick us off here, David. The conversation around, is AI taking jobs, I think is obviously on many people's minds. I think some people are under the belief that this will be one of those other transformational technologies that will eventually, cause more jobs to be created. I'm a little bit of a skeptic, I have to admit, about that. I do think that we are just beginning to see some numbers pop up. I feel like whatever reporting is done now is probably looking at things maybe 3-4 months ago. So I believe that, whatever is happening now, we probably won't know until maybe later in the year, Q3 or Q4. But through some anecdotal, evidence, we are seeing, companies laying off people and then hiring what they call more kind of AI aligned employees, which is an interesting sort of way to kind of, put that. I think what that probably means is one person does the job of what used to be done by 15 or 20 people in the past. That's how I'm reading that. It's going to transform industries for sure. I don't think that the rest of 26 and certainly into 27, we're going to see a slowdown in this. I think we're going to see more. Again, this is just based on some of the stuff that I'm kind of seeing, some anecdotes and some of the reporting. It does seem like AI is beginning to take a bite in the employment sector.
Yeah, I'll just quickly respond and say that I'm already trying to use and successfully using AI to automate our quarterly newsletter, in 15 seconds instead of a few hours, and maybe an analyst, that could take out significant also software companies that we use to kind of currently aggregate our data. I think the key point going forward in terms of it not taking jobs is there needs to be a significant ramp up in training people that are not familiar with AI with the AI skills. Everyone is going to need that. The other thing that I would say will never go away, in my opinion, is the need for critical thinking and creativity. You still have to be able to tell AI what to do and know if it's spitting out something that is incorrect. So critical thinking, creativity, AI skills will allow people to stay employed. And hey, some people are saying that people with these skills are going to be asked to do more, even if it's more efficient and they can do more due to AI. Right. So are they just going to have to work harder? And look, analysts, where everyone is saying they'll lose jobs out of college, they may not be able to need to create Excel models, but they're still going to have to know what the inputs are and understand the output.
Yeah, 100%. I don't think that we disagree there. If anything, like the point that you just made, I do feel like this one person with this skill set will be doing the labor of 15, 20 people, maybe even more. I mean, I don't know, right? I mean, that's the direction that this is heading into, and I just don't think capitalism functions in a way where it just sort of keeps things constant.
Right. Hey, one last point.
If it can find a way to save money or cut costs
people
or increase profits, I think it will, right?
People did say this about the personal computer. And in fact, I just watched a video from back in the day when computers were coming out saying that it was going to be apocalyptic. And if you replaced in this video the word personal computer with AI, it's exactly the same thing. That being said, I do think AI is a whole different animal. So similar to LA.
The only difference to that, the only difference to that, David, if I may make sort of one counterpoint, is that it does seem in this case, AI is impacting everything at the same time. I think personal computer was slowly entering into the brokerage world and education and other kind of things, right? There was this kind of long period of 40, 50 years over which we kind of adopted tech and computers. AI seems to be just kind of 18 months, 24 months.
Oh my gosh, right? It gets better.
And it's everywhere.
Its ability, I swear, increases by the week.
Yes.
It's nuts.
And it's everywhere, right? It's impacting not just one industry at a time, but everything at a time, right?
100%.
And that's the part that I think is really, really different. So, but we'll see. David, what's your closing argument here?
Yeah, I mean, I'll just say my quick closing topic argument as someone that spends a lot of time fundraising is how the news or lack thereof impacts companies, whether it's mine or somebody else's ability to fundraise. If you have sophisticated investors that have invested in real estate, private credit, come from a financial background, they're going to be more impacted by in the weeds, I'll call it, stories like a lack of the ability to redeem your investment out of an evergreen fund, so no liquidity. They're going to be influenced by reading that other real estate, I don't like this word, but for lack of a better word, syndicators made some bad decisions and are giving properties back to their lenders, or again, not allowing redemptions on the private REIT side. On the flip side, you'll see investors that are extremely smart people in their own industry, but are less insiders, and they're going to be more impacted by negative headlines about real estate, uncertainty, and skepticism. So I just find that fascinating, those two different groups. But generally, that's led to a very hard period to fundraise.
Interesting. Yeah. And certainly on the redemption side, we have seen some stories pop up recently where some funds have limited redemptions. I don't know if people are concerned or if they want to allocate it in other sort of areas. But that is interesting. And I don't have any kind of information whether this happens, pre-recession or just, I don't know, if it's some kind of a marker of anything other than the funds don't want him to take the money away. But it is an interesting sort of evolution of everything else going on at the same time, right?
Yeah, I mean, I'll just close by saying, where it became concerning or becomes concerning, particularly to more sophisticated investors, is when you have groups like Blackstone and Starwood limiting redemptions. And it goes back to to bring this full circle, some of them don't want to exit in this environment. And if folks are reading negative headlines, they're going to want to get out. So those two don't work well together. The limits on redemptions have always happened, but I feel like the amount here has been higher. And then the last thing I'll say is more what I'll call private REITs were created in this environment. And so there's just more of them out there that are having the same issue. Now, I am starting to see that fundraising is turning around. And as the real estate fundamentals continue to improve, I think people will be fine. But yeah, it's frustrating when there's no liquidity.
Yeah. Yeah. Wonderful. Well, David, we've managed to waste a wonderful morning talking about real estate here. Thanks for taking the time to chat with me. I really appreciate it. This was great. Hope you have a great rest of the week, and we'll talk soon.
Yeah, I look forward to the next time.